Welcome back to the Dividend Diplomats YouTube channel. You know you're rolling with Bert, the Hurt Locker, and your boy Lanny. We're here to talk to you about two more dividend stocks to watch, two more dividend stocks to buy, possibly this week as we head in towards the end of May. Bert, hit him with the music.
I'm kidding. All right, everyone, smash that subscribe button. Give this video a nice thumbs up. Guys, we are on the road to financial freedom by investing in undervalued dividend growth stocks. We are building that passive income stream. And you know what? The best part about this, the best form of this passive income stream, Lanny, it is you don't need to lift a finger to watch it grow from dividend increases and dividend reinvestment. Guys, that's what dividend investing is all about.
That's it. We practice what we preach. We buy what we talk about here. So guys, we're talking about two more dividend stocks to possibly buy right now. If you haven't caught the last video, definitely check it out. 3 stocks that Bert's watching right now. Bert's buying these dividend stocks no matter what. So here we go. We're looking at 2 more undervalued dividend stocks. One you may argue is not undervalued, but the metrics look really nice. And Bert, how we evaluate these 2 dividend stocks, we look at the diplomat stock screener. 1, that price to earnings ratio. 2, the dividend payout ratio. 3, that dividend growth rate. And we throw in the bonus dividend yield. S&P 500 is very shaky right now. Recession could be coming up at some point. We're in bear territory. What's going on?
S&P 500 is down 18.66%, and that was saved a little bit by that slight rebound that happened at the end of the day last Friday. But yeah, the bears are out. They're out of hibernation. They are running around. You're starting to see all those charts on CNBC, on all the websites that say we're in bear territory. We're down. We're comparing it to some of the big bubble bursts in the past, that dot-com bubble, the Great Recession, the financial crisis, although we got a lot of room to go before the stock market falls like it did before the global financial crisis in 2007, 2008.
But we'll be very ready to buy some undervalued dividend stocks just in case the market heads that direction, guys. Remember to keep safe.
We are, Lanny. We're catching some of these discounts on the way down too, but we're also ready to act by building these watch lists that I talked about last video. You're talking about in this video. That's why we're always doing the research for these stocks.
Exactly. And guys, I mean, they may not be the lowest prices right now, but you can't predict tomorrow. So you buy value when you can. And that's why you'll see more and more of these dividend stock, individual stock videos, because we're trying to put out enough analyses and content for you to help you on possibly making investment decisions. So Bert, do we dive into these 2 dividend stocks? Is it time?
Yeah, it's time to throw the horns up. Let's get the 2 going. Let's do this, Lanny. This first one, I'm very excited for you to talk about this company because it's been a long time since I've heard you talk about wanting to buy this company or even watching this stock.
Guys, it's been a long time coming.
You know what, though? You have been buying a lot of Scott's Miracle-Gro if you've been watching our purchase videos. Now, though, I think it's time for you to talk about some of the equipment that's going to help you spread some of those products here for some of your larger customers.
Yeah, so for some of those larger customers, possibly even, growing some plants over here. We're talking John Deere, ticker symbol DE, and John Deere. Though they're up over 150% in the last 5 years, they're down over 10% this year. And Bert, in one day on Friday, they dropped $50. They dropped over 14% in one day.
Yeah, it looks like the supply chain and inflation bugs bit John Deere hard, and the market, market reacted. But what's funny to me, you see the other headlines, John Deere reports second quarter net income of, just $2 billion there.
Couple of dollars, one for you, one for me. So guys, John Deere has been getting hit, but it's not time to put this deer out to pasture just yet because we're going to dive into that first dividend metric, that price to earnings ratio. John Deere is trading at $313.31. Seems high, but that EPS that analysts are projecting is $22.70 for a PE ratio below 14 at 13.8.
I know it just makes me chuckle, but Huntington Bank, which was on my last watch list, they're currently trading at 13.02. So it's always funny to see a company that has EPS that's larger than that amount. Obviously, it's nowhere close to being an apples to apples comparison. So much goes into it. It just makes me smile. That's all.
That's right. That's right. So to dive into that second metric, that dividend payout ratio. So John Deere pays $1.05 per share per quarter, or $4.20 per year. The payout ratio right now is only 18.5%.
Yeah, interesting. Oh, there's so much room to continue growing that dividend going forward. Moving to that third metric, that 5-year dividend growth rate is 11.52%. They've increased that dividend for 1 year, although they have a history of increasing their dividend. It's just not consistent. Like, it's not the consistent, like, you see 4 quarters grow, 4 quarters grow, 4 quarters grow. Sometimes it's 5 quarters, sometimes it's 9 quarters. Sometimes it's like you zoom out, it trends up. So you can say John Deere's dividend trends in the upward direction. It's just not regular and scheduled.
It's not regular, but you know that it's always going to be there. And when they do it in a big way.
Yeah, maybe they need to start eating some fiber there to help get a little more regular scheduled increases there.
Yeah, maybe they should get some fiber from Scott's Miracle Grow. To dive into that last bonus metric, dividend yield. The yield's not massive here. It's barely at the S&P 500 or slightly below it. But again, they make up for it with that higher dividend growth. They're at 1.34% on your dividend yield.
But you know what? Yield never drives our decision. It shouldn't drive your decision. That's why it's the bonus metric of our screen. We want to make sure it's a quality company. All the other metrics check out. Of course, we look at yield. Of course, we consider it. And it's good that it's in line with the S&P 500. But if we said we're only going to focus on high yielding stocks, you would never consider a company like John Deere. And that wouldn't be right for us or our portfolios, for us to teach all of you too here on our YouTube channel.
That's right. So to summarize, they have a price to earnings below 14 at 13.8. Dividend payout ratio currently below 20% at 18.5. 5-year average dividend growth rate of over 11% with a yield over 1.3%, Bert.
All right. I see why they're on your watch list. Let's move into number 2 here. What's the can that's about to pop up there? Is it a pretend Pepsi can here? Ticker symbol PEP. Tell us about
Pepsi. Young. Well, I'll tell you a little bit about Pepsi, brother. They're now a dividend king. Crown me.
King of the ring. Let's go here. Wait. You're gonna pop up on this side. I always pick the wrong side when I do it. There you go, Lanny. Crown the Dividend King here with Pepsi.
Yep, and they are a beverage, global beverage and snack provider. They're so deep into this, obviously they have the Frito-Lay brand, obviously the Pepsi brand. I mean, you name it, they do it, they sell it. Such a strong company. And, really what's catching my eye here, as you'll see, is their consistency. We talk about Johnson & Johnson being so reliable. Pepsi's in that discussion, guys. Pepsi's track record of not only just being a great company, but growing earnings, growing that dividend consistently. It's just so solid, plus with a very solid dividend yield.
Yeah, one could argue if you were going to start your own weekly or automated investment strategy, whatever the frequency it is, if you want to build out your dividend stock portfolio, picking a company like Pepsi to buy on a regular basis, while it may never be the cheapest, you can't ever go wrong, and your portfolio will be thanking you years into the future if you were looking for that.
Yeah, there's no doubt about that. And in fact, we can give a quick shout out to Russ over there. I think he accomplished his 100 shares of Pepsi. And, once you see the metrics, you'll see, hey, I see why he, started building that position to cap out at 100 shares of this great company.
So let's put them
go ahead.
the screener here, Lanny. Let's pull up that first metric, the PE ratio. Their price, 162.21 at the time of this video. Earnings per share, $6.66. Iron Maiden fans, shout out to all of you right there. Get that number of the beast. You have a PE ratio of 24.36.
24.36, so not cheap, not even below the S&P 500, but you'll see the other metrics why during such a turbulent time that it's not bad buying Pepsi stock, because that second dividend stock metric, the dividend payout ratio.
Let's look at that payout ratio, Lanny. That annual dividend, $4.60 payout ratio, 69.07%. So
Slightly on the higher side, kind of what you usually see with Procter and Gamble. Sometimes they have a higher payout ratio, but that's typically kind of where it has been at, always in that 60 to 70% for Pepsi. I'm not afraid, still safe. Pepsi's been there before, all good. Looking at that dividend growth rate as the next metric, they've been increasing their dividend now for 50 plus years at an average rate of 5.89%.
fantastic. I mean, again, consistency, nothing more to really say. You hit it on the head earlier. The numbers prove it right here. Let's look at that dividend yield. It is creeping close to 3% here, Lanny. Their dividend yield is 2.84% at the moment.
So to summarize here, you're looking at a 24 price to earnings ratio, 69% on the payout ratio, about 6% on the dividend growth rate, with the yield closing in on 3% at 2.84%. So who's buying John Deere stock or Pepsi stock right now? Let us know in the comments. Bert, what's your quick take on these two dividend stocks?
Yeah, I don't own a position in John Deere, and I've been pretty vocal on trying not to initiate a lot of new positions, but I see why it's on your watch list. The metrics there for John Deere are great, and I always love Pepsi. I'm always going to continue to love Pepsi, so they're always going to be on my mind no matter what. So again, I can easily see why this company made it onto your watch list. Nice, great two dividend stocks, Laney.
Right now, I'm not currently going to be pouncing on either of these two stocks, but they are on my watch list. So let's just keep that in mind. I'd like to see Pepsi, possibly hit that closer to 3% dividend yield. I know it's being stubborn. John Deere, I'm curious what other headwinds they're going to be facing here in the short term, because they just lost $50 in share price in one day, but they're actually still down year to date less than the S&P 500. So it's like, is there a little bit more room to go on John Deere? But the metrics do look great. So I'll be watching both very closely. But obviously, let us know your take on these two dividend stocks.
And let us know what other stocks you're watching. What other ones should pop up on our radar as well. If you haven't already, please, everyone, click below and subscribe to our button. Give this video a thumbs up. Everyone, let's go. Let's get to financial freedom together.
That was Bert the Hurt and Lanny from the Dividend Diplomats. Over and out.